All right, let's break down the key company news and the SEC filings you really need to know about today. We're going to cover everything from a sportswear brand that is just sprinting ahead of the pack to the future of fintech, and it all kicks off with one single massive number.
20%. I mean, that is a huge pre-market jump for any stock. It's the kind of move that just immediately sets a company apart from everyone else. And yeah, it's the number that has everyone talking this morning.
So who is it, and what in the world is fueling such an incredible sprint? Let's dive in. The company at the center of all this is On Holding. Ticker ONON. The Swiss performance sportswear brand that you've probably seen absolutely everywhere. They just dropped a third-quarter earnings report that didn't just beat what analysts were expecting, it completely blew it out of the water.
I mean, just look at these numbers. They tell the whole story. Revenue just surged, up almost 25%. That's a huge sign that people are still willing to spend on premium brands. And get this, their gross margin hit a record high of almost 66%. That points to incredible profitability. Then you have earnings per share, which beat estimates by a whopping 74%. And as if that wasn't enough, they raised their forecast for the full year. This is a company just firing on all cylinders.
Okay, so that's our big headline mover. Now let's take a look at what else is shaking out across the market. We're going to jump into the mixed signals in fintech, check out the latest in streaming and crypto, see what's happening with major consumer brands, get a pulse on health and prop tech, and then, of course, look at what to watch next.
First up is fintech, and wow, we are seeing two very different stories playing out here. On one side, you've got amazing growth and these really powerful partnerships, but on the other, you've got this clear signal of caution about what's coming down the road.
And you can see that contrast, perfectly right here. Affirm just locked in a 5-year extension to its massive partnership with Amazon, and they backed that news up with a huge earnings beat and a 42% jump in transaction volume. But then you have Upstart. Now, they actually beat on profit, but the stock got hammered anyway. Why? Because of weak guidance for the next quarter. It's just a perfect reminder that, right now, what management says about the future can completely overshadow how well they've done in the past.
So why the weak guidance from Upstart? Well, their CEO came out and said they chose to be conservative with their AI models, which meant they didn't approve as many loans. It's a strategic choice for sure, to play it safe. But for investors, it just signals a slowdown in growth. And that is exactly why the stock took such a big hit.
But it's not all caution in fintech, not by a long shot. Elsewhere, there's a lot of positive action. Lending Club is up on a nice analyst upgrade and a new stock buyback plan. PayPal is getting a boost too, after beating its numbers and raising guidance under its new CEO. And you'll want to keep an eye on Block today. They're about to show off their AI roadmap after reporting some huge growth in their Cash App.
Okay, let's shift gears now to the digital world. We're seeing some really big moves in both streaming and crypto as these major players are all trying to carve out their space and really define what the future of their industries is going to look like. So, Netflix is making a bunch of strategic moves to really solidify its top dog status. They just got a big vote of confidence from the firm MoffettNathanson, which sees huge potential in their ad-supported plan. They're also expanding the brand with something called Netflix House, an immersive experience. And that upcoming 10-for-1 stock split, that's all about making their shares a bit more accessible for more investors.
Over in the crypto space, here we go again with another fascinating contrast. So, Robinhood actually beat its earnings estimates, and its crypto revenue just exploded, up 339%. But the stock still fell because investors got worried about higher operating costs. Meanwhile, you have Coinbase, which is getting a ton of positive buzz for its new regulated token platform. The CIO of Bitwise even called it a key market theme for 2026. That's a really powerful endorsement.
All right, let's turn our attention to the brands we see every day, the ones in our homes and our pantries. And in this space, the story is really a mix of some analyst caution and a very, very important lesson that's kind of hidden inside an SEC filing.
First up is BellRing Brands, the company behind Premier Protein Shakes. Well, they report earnings next week, but the investment bank TD Cowen is already signaling some caution. They've actually cut their price target on the stock from $45 down to $37 because they're seeing data that suggests growth might be slowing down.
And from there, we see this headline about the online furniture giant Wayfair. A top executive just sold over 4,000 shares of company stock. Now, on the surface, that's the kind of thing that can look pretty alarming.
So the immediate question is, should you be concerned when you see a high-level insider selling a chunk of their shares? I mean, does it mean they know something bad is coming?
Well, the answer is found in the filing details. See, this sale was done under what's called a Rule 10b5-1 plan. And all that is really is a prearranged plan that lets insiders schedule sales way in advance, for any number of reasons, maybe for taxes or just to diversify. The crucial point is that this wasn't a panicked reaction to some recent news. It was an automated sale, probably set up months ago. It's a fantastic example of why it always pays to look beyond the headline.
All right, time for a quick pulse check on health tech and prop tech. In these sectors, sometimes the most important story is the one that isn't making headlines. It's kind of about the quiet before the next big thing happens.
In health tech, for example, things have been really quiet. The latest news on Teladoc is actually a filing from last quarter, and Hims&Hers just had its neutral rating reconfirmed by Morgan Stanley. It really just seems like this whole sector is taking a breather after a busy earnings season, just waiting for the next big catalyst.
And you know, it's a very similar story in prop tech. For companies like Zillow and Opendoor, their own individual performance is kind of taking a backseat to the big economic picture right now. The most important driver for these stocks isn't a single earnings report, it's what the next report on mortgage rates says about the housing market as a whole.
So, after that quick tour of today's market movers, let's bring it all home and look at what's coming up on the calendar that you absolutely need to have on your radar. Okay, here are 3 key events to watch. Later today, Block is hosting its Cash App Releases event, which should give us a really important look at their AI strategy. Then, tonight, after the market closes, we get the big one, Disney's earnings report. And then next week, on November 18th, we'll find out if those analysts' concerns about BellRing Brands were on the money.
And that brings us to our final and maybe most important question. All eyes are on Disney tonight. Their performance, especially what they say about subscribers and the profitability of Disney Plus, is going to have a ripple effect across the entire streaming world. So, will their results lift the whole sector up or drag it down? Well, we're going to find out in just a few hours. Thanks for tuning in.